$1.2 trillion in Q1. The market is back and I'm dusting off my banker fleece.
Put the fleece away. Transactions are actually down 17%.
But the volume?
Is a mirage. They're counting OpenAI's $110 billion funding round as M&A. It's just venture capital wearing a trench coat.
Okay, fine. AI is skewing the math. But real buyouts are still happening. Apollo just sold Sapphire Gas to Antin.
Now that is an energy play actually worth tearing apart. The rundown.
$1.7 billion, that is a massive structured finance package for Klarna. Värde Partners is not messing around.
Massive, yes. But look at the actual structure. It is not an acquisition. Klarna is just cleaning up its balance sheet before an IPO. They are packaging up receivables.
Spoken like a true skeptic. But look at the broader tape right now. Corporate boards are actually spending money again. Global deal value surged 26% year over year. We broke $1.2 trillion for Q1.
I am so glad you brought up that $1.2 trillion number because it is complete fiction.
Oh, come on. A trillion is a trillion. Money changing hands.
No, it is not. If you read the actual report, the number of real transactions dropped 17%. The only reason the dollar value looks so good is because they are lumping in massive AI fundraising rounds.
You mean the venture stuff?
Exactly. You have OpenAI raising $110 billion and Anthropic pulling in $30 billion. Those are venture mega rounds. Calling that M&A is like calling my gym membership a real estate investment.
Okay, that hurts, but fair point. Traditional bankers are definitely scratching their heads. The middle market is still dragging, but we did see some actual traditional corporate M&A today. Warner Music Group bought Revelator.
I actually love this deal. Revelator is a music rights platform. Warner is quietly stacking its tech portfolio. Music royalties are a tracking nightmare, so buying the plumbing makes total sense.
Speaking of plumbing, GDC IT Solutions grabbed Global Help Desk Services, taking their 24/7 US support international.
I read the press release. It essentially translates to, we need to handle midnight password resets in Europe now.
The glamorous world of outsourced IT. We also saw Lupin finalize its acquisition of VISUfarma, taking that specialty pharma asset off GHO Capital's hands.
Specialty pharma is basically just a high-stakes game of musical chairs for private equity.
It really is, but if you want to talk about real capital deployment right now, we have to look at infrastructure.
Specifically energy.
Right. Antin Infrastructure Partners just picked up Sapphire Gas Solutions from Apollo Funds. It is a massive CNG and LNG play.
Apollo is cashing out, but Antin is betting heavy on bridging the energy gap. I want to pull apart the valuation on this Sapphire deal because the multiples in infrastructure are getting completely detached from reality. The big one. You look at that headline number, $1.2 trillion for Q1. And you think the glory days are back, up 26% year over year. But then you read the actual report and realize transaction volume is down 17%. It is a complete mirage.
I am not sure it is a total mirage. The value is real capital moving around. Market analysts are saying corporate boards are finally off the sidelines. We have been waiting 2 years for them to stop making excuses about the macro environment, and they are finally writing massive checks.
They are writing checks to 2 companies, Nate. Look at the footnotes. They are lumping OpenAI's $110 billion funding round and Anthropic's $30 billion into traditional M&A stats. That is venture equity fundraising. It is not M&A. It is artificially inflating the entire market health narrative to make bankers feel better about themselves.
Ouch. I feel personally attacked. But okay, fair point. The AI mega rounds are definitely skewing the average deal size into the stratosphere. You strip out those 2 monsters, and the chart looks a lot less like a hockey stick and more like a flat tire. But you cannot ignore the real buyout activity happening underneath the AI hype cycle.
I am not ignoring it. I am just saying, let us look at the actual deals. The middle market is still dragging. If you want to talk about a real transaction, look at what Antin Infrastructure Partners just did with Sapphire Gas Solutions.
Oh, I love this deal. Taking Sapphire off Apollo's hands, this is classic meat and potatoes private equity. No generative AI in sight, just good old-fashioned compressed natural gas.
And liquefied natural gas. The beauty of Sapphire is the vertical integration. They do not just provide the gas, they handle the equipment, the logistics, the actual physical delivery systems. Antin is buying a turnkey operation. Apollo squeezed the operational efficiencies out of it, and now Antin gets the long-term yield.
Apollo held this for what, maybe 3 years? They rolled up a few assets, slapped a nice corporate bow on it, and handed it to an infrastructure fund that is sitting on mountains of dry powder. We are going to see so much more of this energy infrastructure play tomorrow and into the next quarter.
Wait, are you actually admitting that traditional tech buyouts are dead and we are all just pipeline guys now?
Hey, pipelines generate cash. Whether it is a data pipeline or a literal gas pipe, I am agnostic as long as the internal rate of return is good. But seriously, the multiples on these infrastructure deals are getting aggressive because funds like Antin need reliable physical yield.
Which is why I actually respect this deal. It is grounded in physical reality. It is a real asset. Unlike the headline data, where we are counting venture capital as mergers.
You really are not going to let that Q1 data point go, are you?
Not until the data providers fix their methodology. It is lazy.
Well, speaking of massive numbers and highly creative structuring, we need to talk about what is happening over in consumer credit. Värde Partners just threw $1.7 billion at Klarna, and you are going to absolutely love the footnotes on this one. Voices. I'm looking at a note from a major analyst desk this morning claiming corporate boards are officially off the sidelines. They say boards are actively pursuing deals despite the macro environment.
I read that same note and laughed out loud. Actively pursuing deals. Transaction volume actually dropped 17% in Q1.
But deal value surged 26% year over year, over $1.2 trillion. You can't just ignore a $1 trillion quarter.
I'm not ignoring it. I'm looking at the data. Industry watchers are pointing out this surge is completely skewed. They're lumping massive AI equity investments into the M&A stats.
Wait, they're counting venture rounds as M&A?
Yes. OpenAI's $110 billion round, Anthropic's $30 billion. Those are sitting right there in the 1.2 trillion figure.
Okay, as a former banker, I genuinely respect the hustle of inflating your league table credit. That's a classic move.
It's corporate theater. Buying a minority stake in an AI model so you can use their cloud credits is not a merger. It artificially inflates the perceived health of the traditional deal market.
I actually disagree. Capital deployment is capital deployment. If a tech giant locks up Anthropic, that is strategic consolidation. It functions exactly like M&A.
Functioning like M&A doesn't make it a buyout. Traditional deal makers are scratching their heads right now. The middle market is lagging way behind these mega deals, and their reality doesn't match the inflated headlines.
Fair point. The middle market is definitely feeling the pinch, though we are seeing some real traditional capital moving in infrastructure. Speaking of actual buyouts, we need to talk about what Antin is doing in the energy space. Spill the tea.
I am officially starting a petition to ban data providers from counting venture capital rounds as M&A. It is making my spreadsheets look ridiculous.
You are just mad because the headline number looks great. $1.2 trillion in Q1, up 26%. The bankers are high-fiving.
They are high-fiving over a lie, Nate. Deal volume is actually down 17%. The only reason the total value is up is because OpenAI raised $110 billion and Anthropic raised $30 billion. That is not mergers and acquisitions. That is just Silicon Valley throwing GDP-sized bags of cash at servers.
Capital deployment is capital deployment, Maya. Whether you are buying a company or buying a warehouse full of NVIDIA chips, the advisory fees spend exactly the same.
Oh, come on. You cannot honestly tell me a structured finance deal like Värde giving Klarna $1.7 billion is the same as actual corporate consolidation. Warner Music buying Revelator? That is a real deal. A tech giant buying a minority stake in an AI model? That is a science fair project.
A science fair project with a higher valuation than Ford? But I get your point. The middle market is completely dead right now, while these mega rounds suck all the oxygen out of the room.
Exactly. The analysts are out here saying corporate boards are actively pursuing deals. No, they are not. The massive AI equity investments are totally masking the underlying freeze.
Well, if you want real, traditional, old school M&A, we do have some actual infrastructure moving around. Private equity is finally doing something other than buying software.
Thank God. Tell me someone bought a pipeline.
Better. Antin Infrastructure just took Sapphire Gas off Apollo's hands. So what happens to the energy sector next? Tomorrow's radar. Tomorrow, I'm watching the middle market. Everyone is popping champagne over this 1.2 trillion Q1 number, but I want to see if the mid-market actually wakes up.
You mean the 1.2 trillion that's mostly just AI companies passing around the hat?
A 26% jump in deal value is a real narrative shift. Boards are finally moving.
Oh, come on. Volume is down 17%. They're lumping OpenAI's $110 billion round and Anthropic's $30 billion into the M&A stats. That's not M&A. That's just venture capital on steroids.
Spoken like a true purist. Capital is capital.
It artificially inflates the market health. What I'm actually watching tomorrow is infrastructure. Antin just bought Sapphire Gas from Apollo, and private equity has way too much dry powder in energy.
Right, Apollo cashing out means they're going hunting again. Energy is going to be a total bloodbath this quarter.
A highly profitable bloodbath. We'll track who they target on the next one.